Stephen Rowles, analyst at CFC Seymour. Stephen, what's going on with dollar today? It looks like we're seeing continued selling after the dollar weakened overnight on the back of fears of a recession in the U.S.
Yeah, we're seeing more of that today. It really comes from the Philly Fed numbers, which were quite dramatically lower than expectations. But and that further confirms further rate cuts on March 18th, and we look for a 50-point rate cut on that day. But looking ahead, we look for further rate cuts, and the market does as well for another overall 100-point rate cut for the next couple months here. But looking at the Philly Fed, what I'm really focusing on is the prices received portion of that index was accelerated dramatically. So that confirms that inflation fears are very strong here. So I think when we're looking at the U.S. dollar over the next short term here, we'll see some limitations on how far the Fed can cut here. So monetary policy will continue to be easing, but inflationary pressures are holding them back just a little bit there.
And translate that to what the dollar is going to do, because, you know, I've been hearing from other people that we should be seeing a dollar rebound in Q1 or Q2. Well, we're not quite seeing it yet.
Yeah, I don't think we'll say rebound until Q4, but what we sort of expect to see is that towards Q2 we'll see continued rate cuts, so the interest rate differentials will favor the euro. So we should see the dollar breach 150 and could hit up to 152 at level. But towards the fourth quarter, we'll see the stimulation from the fiscal package and monetary easing help the U.S. economy. And at that point, the Fed will be more focused on inflation. So we could see hikes at that point. So look for the euro or the euro to reach 152 against the dollar, and then towards fourth quarter fall off towards today's level, towards the 147 range, around there.
Okay, in the short term though, dollar yen, sort of a gauge of risk appetite as well. 107.30-ish is where we are right now. Could we see this 107 being breached in the next couple of days or even today?
Yeah, we could say next week. There's quite a lot of data next week. There's a lot of housing data next week, and durable goods, as well as confirmation of GDP figures. So we could see the yen move to the 105 range next week for sure, I think.
Okay, let me ask you the renminbi real quick here. Are you making any changes to your yuan forecast in light of the CPI numbers out of China? Just today, in fact, we've got officials saying they expect the February and March numbers to be higher than forecast because of the winter storms, but they're not changing their full-year target for CPI of 4.8%. So are you making any changes to your forecasts and your yuan expectations?
No, we're not. We're sticking to the course, but it's not too dramatic of a move that they're sticking to their forecast. We still look for more tightening. We look for the reserve requirements to increase up to 16% in the next couple of weeks here. So with that on the table, look for further yuan appreciation. So it's a domestic issue now, so appreciation yuan will help their economy lower inflation. So the foreign pressures are not going to be as strong as they were, so the domestic issues is helping that push the yuan further up.
Okay, all right, Stephen, thanks so much for joining us today.
Great, thank you.
Stephen Rowles, our analyst at CFC Seymour. Now, just ahead on cash.